Anglo American and Teck Resources have won decisive shareholder support for their planned merger of equals. This is a major step towards forming Anglo Teck. Now, the new firm will be a Canada-based critical minerals giant and one of the world's largest copper producers. Both CEOs have hailed the development as a milestone, saying the merger will create a world-class copper growth platform. The focus now shifts to a rigorous round of regulatory approvals across several countries. The process expected to run through 2026. Mr. Price has inked a deal to acquire the retail business of the NKD Group. The asset is German headquartered and is a cash-based value apparel and homeware retailer operating in Central and Eastern Europe. The transaction carries a price tag of about 9.6 billion rand and will be funded through a combination of existing cash resources and debt facilities. CEO Mark Blair says NKD is ambitious and performance-driven and so a natural fit for Mr. Price. Libstar is pushing ahead with its portfolio simplification drive. The consumer goods company has completed the disposal of its fresh mushrooms business, but this has come at a cost, I'm afraid. The firm has warned that it's likely to report a pre-tax loss of between 45 and 55 million rand from the transaction. At the same time, Libstar is moving closer to fully exiting its non-food categories. The board is assessing non-binding expressions of interest in Contactum. That's the firm's remaining household and personal care business. The strategy update comes alongside a trading update for the 47 weeks to November the 21st. Libstar grew revenue by 6.7%. That's due to gains in both its ambient and perishable products divisions. The group will open its books on the 17th of March. CAP has reported a strong start to its 2026 financial year. The diversified industrial group says during the 5 months to the end of November, earnings and operating profit increased. The improvement follows last year's pressure from higher startup costs, elevated finance charges and weaker vehicle production, all of which have now begun to ease. But with trading conditions are still tough, CAP expects earnings and headline earnings per share for the half year to rise by more than 20%. Results are due at the end of February. Grindrod says its first 11 months of the year with steady operational and financial progress went very well. That's despite weaker commodity markets and a 12% drop in average dry bulk prices. Demand for iron ore and chrome remained firm, helping the Maputo Port dry bulk terminal lift exports to 13.9 million tonnes. TCM also hit a record 9.1 million tonnes for the period, while safety performance remained strong with 0 fatalities. Grindrod's share of earnings from the Port of Maputo rose to 338 million rand, and the EBITDA margins in its ports and terminals improved to 39%. With a solid balance sheet and growth projects advancing, Grindrod says it's shifting from restructuring to optimizing core operations. Full year results will be released in March. Retail sales rose 2.9% year on year for October. That's above the 2.3% the market had forecast. Textiles, clothing, footwear and leather goods led the increase, but gains were largely broad-based. On a month-on-month basis, sales ticked up 0.9%. And further afield, SpaceX, led by Elon Musk, is reportedly planning or preparing for an initial public offering next year, aiming to raise over $25 billion and target valuation exceeding $1 trillion. Let's take a look at this packaged report for more.
SpaceX is pursuing an initial public offering next year. That's what a source told Reuters. They said Elon Musk's firm wants to raise more than $25 billion with a valuation of more than $1 trillion. The source further added SpaceX has begun talks with banks about the public listing, which could be around June or July. Musk said 5 years ago SpaceX planned to list Starlink in the future, but only once its revenue growth became what he called smooth and predictable. SpaceX didn't immediately respond to a request for comment. Bloomberg reported SpaceX expects to use funds from the listing to develop space-based data centers. That includes buying the chips needed to run them. It further reported the company is expected to make around $15 billion in revenue this year, with that rising to between $22 billion and $24 billion next year.
Meanwhile, China's annual consumer inflation rose to its highest level in 21 months for November, led largely by higher food prices, while producer prices fell further as well. The underlying data indicates domestic demand is still subdued and unlikely to rebound soon. Here's some more detail.
China's annual consumer inflation accelerated to a 21-month peak in November. Wednesday's data showed it was mainly driven by food prices, although factory gate deflation deepened, and underlying trends suggest domestic demand is still weak and unlikely to recover in the near term. Official data showed the Consumer Price Index, or CPI, rose 0.7% from a year earlier, up from a month before. The pickup in consumer inflation was mainly driven by rising food prices. It rose 0.2% year-on-year after falling just under 3% in October, although the CPI dipped 0.1%, lower than gains seen in October and below analyst forecasts. The $19 trillion economy is on course to meet Beijing's growth target of around 5% for the year. The rise is driven by policy support and resilient goods exports. But economic imbalances have gotten worse this year due to US President Donald Trump's global trade war. The trade tensions have added to persistently soft consumer demand and put pressure on policymakers to step up stimulus measures. Factory gate deflation has also dragged on for 3 years in China. It's hurt the country's economy, even as the government has stepped up a campaign to curb industrial overcapacity and called on key sectors to scale back tough competition. The latest data showed few signs of a recovery in the deflationary pressures.